Once again, good morning and welcome to our second day of events here in the Traders Arena. Thanks so much for joining us. We have a wonderful panel to start the day on precious metals trading. We'll talk about virtual trading and physical trading and the key differences and trends in the market. We're going to touch on a lot of things that are driving the precious metals market this year, and whether it's going to be a growing market, is it for everyone, and the future of trading in this space. I'm Adam Mutton, the founder of ForexLive, and I'm going to let my guests here, my esteemed guests, introduce themselves. Why don't we start with you, Peter?
Scary. Well, welcome everyone, and thank you for inviting me to this panel, and thank you for all the wonderful water. Really welcome on a day like this. My name is Peter Karsten, and I'm CEO for StarTrader. We've been around for a while. You probably recognize us. I can see very many familiar faces here, which is really wonderful. And yeah, 2024 was an incredible year for us. 2025 is looking very exciting with the new administration and so forth, and it's going to be fun. My background is that I'm originally from Finland. I've lived in London most of my life, so I've lost some of my Finnish accent, not all of it. And I've worked for big companies like Nokia, Citibank and so forth, and also run a bunch of smaller companies. And this is it now. Dubai is exploding, and this is the place to be. So I'm incredibly proud to be here with you guys now.
Go ahead, Diego.
Hello and good morning. So it's a pleasure, first of all, to be here with you guys. Adam, you, Peter, and Richard. I represent FBS. I'm the lead partnership manager there. FBS, I would invite you guys to also visit our booth. We are in the market since 2009. We are a Forex broker. You can also trade with us CFDs and metals. So it would be something related to the discussion, and I would invite you to come and get to know a little bit more about the company. So thank you and good morning.
Good morning, everybody. My name is Richard Wynn, and I'm the CEO of Neex. It's actually a very new appointment. I only joined the firm 2 weeks ago, so I'm still finding my feet, but I'm very happy to join the team. Here in Dubai, we are a relatively new office. We have regulatory permissions in Australia, South Africa, and Mauritius. Extremely excited to be with the company, very ambitious for Forex trading, CFDs. My background goes back a long way through institutional brokerage and investment banking. Way before electronics, I've been a trader of physical gold and metals and foreign exchange. And I'm very happy to be here and happy to help on this panel and serve with my colleagues.
All right, wonderful start, guys. Why don't we get right into it? Let's talk about why are people trading gold, and why is there still a pull for physical gold, as the topic of the panel goes? We'll start here with you, Peter. Physical gold, and people do want to accumulate physical gold and store a certain portion of their wealth in physical gold versus holding it and the safety of holding it virtually. Where do you come down on the idea of how much a person might want to hold physically versus in some sort of derivative instrument, and which instruments do you think are valuable?
Well, if we start on the physical side, then I have a couple of friends who trade physical gold, and it's not that easy because if you're buying a large quantity of physical gold from East Africa or wherever you're buying it from, you have logistics. You need to actually move the gold. And you have payment security, which is a challenge because if you pay and then go get the gold, then you won't get the gold. So the actual handover of the physical asset and the money, that mechanism is actually difficult. So payment security is a pain when you're dealing with 100 million of physical gold. It's difficult because people do simply walk away with your money. If you don't get it right. So you have exchanges that happen in lawyer's office, you have big packages and so forth. It's not easy physically to trade physical gold if the amounts are big enough. It becomes very, very difficult. And also, if you transact via fiat and traditional banks, then you have the money laundering issues. Even when the money is entirely clean, it's something that needs to be explained. Now, if you're paying and your money is clean and the money is being held up for a week or 2 or 3 or 4, then the seller will feel unhappy that the money has not arrived and the price might shift. So again, you have a transactional difficulty. So it's actually difficult to trade large quantities of physical gold. I mean, what's your thinking on that?
I definitely support that there are certain difficulties, but I also think that some people will still have this necessity of tangibility. They want to touch what they own. So maybe this is the main reason why we still have people that are so focused on having this physical gold trading. Of course, yes, also there is the question of divisibility, right? Sometimes you cannot divide. If you have a golden bar and you divide it, you can probably devaluate it. So it's not so easy as trading virtually. But yes, I agree with your points.
Yeah, very, very interesting points, but I suppose it depends on the volume and amounts you wish to accumulate and what you want them for. For smaller investors, if your long-term view is you want to keep some gold, then by all means, buy a small amount of physical gold. Storage isn't really a problem. It's just under 1% for the insured value. Put it away and forget about it. So that's fine at the smaller retail end of it. But we also have to consider now the commercial use of gold. It's growing exponentially now. I think it accounts to about 11% of all gold traded is using commercial. In each and everybody's smartphone here, there's 0.03 of a gram of gold. That sounds like a small amount, but if you add that all up, gold is an incredibly good electronic conductor. And this is going to carry on now with even its satellites, low Earth orbiting satellites. The demand for gold on a commercial basis is growing all the time. So I think from that point of view, you will still see the demand for gold generally rising. It's a very liquid market in terms of volumes. Perhaps I'm straying off piece a little bit to where we were. In terms of volumes, the CFD market itself accounts on a daily basis, $70 billion worth of gold is traded on a daily basis. In total gold trade, it's something like $130 billion. So there's always going to be a demand for gold. I think the trend will remain higher. Yes, you're going to have a bumpy ride, buckle up and enjoy the ride. We may have a little bit of political turbulence in the next couple of weeks, but for me, I think the trend is still intact to go higher.
Well, touching on that though, with gold, if you want to invest in gold, you have these options, right? You have CFDs, you have physical gold. What's the pull? Why should I, as an investor, invest virtually rather than in physical? Or in what instruments? Even right down to gold miners, or what is somewhere where I feel I can get the benefits of gold, all the benefits, including the safety, whereas without taking sort of the risk of physically holding it, but ensuring the security of what I'm trying to do.
Well, there's the emotional side is, of course, there. It's emotionally nice to be able to touch something. That's nice, assuming that it's real and the percentage is what it should be, which is not so obvious. If you disregard the emotional side and you look at it from the from the perspective of being a trader, broker, or an investor, then you don't necessarily need to touch it, and you can compare it with other things. So gold is kind of a commodity. So all right. So what other commodities are there? Well, at breakfast this morning, I had a cup of coffee, and I don't take sugar, but I did have some bread, which is wheat. Okay, coffee, sugar, wheat, and then I came here with a car which used petrol. All right, so that's coffee, sugar, wheat, and oil. Those are all commodities. If we look at how those are traded, then all of those are traded 90 to 95% without a physical transfer of goods. So coffee and sugar traded through, I think it's ICO, I forget. There's a particular exchange that's traded through. And the physical part of that is, or each of those is about maybe 200 billion per year. But if you look at futures, if you look at swaps, if you look at the other forms, then that's 2 trillion, that's 3 trillion for each of those assets. So those are virtual things. Futures, of course, are these things where you decide to do a transaction in the future. So you're buying or selling in the future, and you buy a futures contract. And those futures contracts typically change hands a number of times, and typically there's no physical delivery of actually what was in the futures contract in the beginning. People who do hedging, typically they use options, they use swaps, things like that. And for hedging, again, the volumes are big. That people trade a lot with these options and swaps and so forth, and they're tradable assets in themselves. So for all of those things, you end up with mainly virtually traded goods. So,
but then there is an interesting argument that gold is somewhat suppressed by so much money that's invested in gold, not in physical gold, and it's held down. But that lets me change it up a little bit to talk about the price of gold. You know, it had a wonderful year in this past year. Diego, why don't you tell us where you see gold heading and some of the things that you're watching for this year in terms of the price of gold?
All right, so we had there some fear when Trump came, right? And we thought that the price would probably go down, but we saw today it was 270.90. And from our analysts back in the company, we see if gold reaches the high of 2,800, we're probably gonna go up to 3,100, 3,500. So it's what we are expecting now. So even with the fear that the policies that Trump could bring, we see that the price is still rising. So I believe it's how it will go.
Why don't you tell us about where do you see the enthusiasm of gold right now?
Well, it's a very liquid market, and an interesting point to step on is between the turn of the last century and up into 2008, central banks were net sellers of gold. And being British, we always look back in hindsight and say how foolish it was of our Chancellor to sell half of our reserves, 400 tons, at an average price of $285, if you can believe gold was actually that price. But he wasn't alone. All central banks were doing it. Subsequently, since 2008, central banks, global central banks, have turned into net buyers. The Turkish central bank, huge buyer, the Polish central bank, the Chinese central bank. And let's not forget, for half of the last century, Chinese citizens weren't even allowed to buy gold. So now, in the subcontinent of India and China, huge demand. But if I may just step on to the original part of the question is, what's the best venue to trade gold? If your interest is a long-term position in gold, certainly buy some physical gold, insure it, lock it away. If you're more, and given the environment we're sitting in here, what would be the advantages, pros and cons of trading it on a CFD basis? Well, it's going to allow you to capture short-term trading. If you are interested in capturing short-term volatility, what you have to consider when you sign up with a broker, understand fully what the terms are in terms of swaps and commissions. If you're going to buy gold, be aware that it's expensive. You will be charged on a daily basis. That's if your broker charges gold. Don't over-leverage yourself. Don't be tempted to go up to the hill. Allow a little bit of space, and as you see, and as we predict gold is rising, by all means, just add an average up as it goes up. Never average a long position as the market is going down. In any commodity, that's a recipe for disaster. So I think there are a lot of advantages if you don't want to get involved in the payments and the shipping and the lack of trust, and as Peter highlighted earlier, transfer of product and money. I think the CFDs are an extremely good venue for short to medium term trading.
You know, it's funny, you touched on China and retail demand there. You look at the Chinese landscape right now, and in the last number of years, if you're a high net worth person in China, you don't really have too many options of things to invest in. The equity market has been a dog for a number of years now, a little bit better last year, but still hugely cheap. Bond market has been strong, but its yields now 1%. You're lucky to get 1%. Real estate was the go-to place for the Chinese investor for 25 years, and it's in a bust right now. And you can't invest abroad, so gold has pulled more and more retail demand in from China, and we'll see that. We see the seasonal trade into Lunar New Year at the end of this month. Peter, do you have a view on the price of gold or things that investors or traders should be watching in terms of price of gold and risks this year as well?
Well, we're a broker, so we don't give advice. So I'm not. You're an analyst, so you can opine in that sense. It's difficult for me to do that, but I definitely will do anyway. Say something without advising. I think all in all, if you have some wealth and if you want to expose some of your wealth to the prices associated with gold, then I think all the products that are being promoted here by StarTrader and by all the companies here, by your company, I think it's a great way of exposing part of your wealth to the fluctuations that gold has. So that makes sense. And your intent as a trader should not be to physically own shares in Microsoft. Your intent as a trader should be to expose part of your wealth to the fluctuations in the market that you think will happen. So for me, virtual goods are perfect for that. Everything in this trade show is absolutely right, in my opinion. This is what it's all about. In terms of where it's going to go next, well, that's a difficult thing because I think 2025 and 2026, in fact, the next 4-year period is going to be magnificently volatile based on what we've seen before. Now, things might be different because things can always surprise us. But volatility that's good news for traders. That's fun. If there's no volatility, then being a trader is quite boring. But if there is some action, then this is a good place to be. So my gut feel is that learning to trade now, getting into trade now makes sense because my gut feel is that 2025, 2026 and onwards, those 4 years, will see many winners and there will be a lot of articles of big winners. And if people want to be in a position where they might benefit from that, then learn to trade. I mean, what's your take on that?
Do any of you have a view on what the enthusiasm is about gold? You know, if you were to tell me a year or 2 years ago it would be $2,700 in gold, I would have thought when I turned on CNBC they'd be talking about gold all the time, or Bloomberg. But still, so many assets have had such a run in the last year and even in the last few months, including crypto, that gold has never quite found the spotlight. So, you know, what does that tell you? You know, you're a veteran trader that we don't. I remember gold when it was hitting records in 2008. There was gold on TV. It was gold talk all the time, and we don't have that, even though we're close to records. What does that tell you about the state of the market or where we could head?
It's interesting. It's been the sort of quiet boy at the back of the classroom for many, many years, but now it's there and it's being noticed. We also have to look, there are other factors that are going to drive it. As I stepped on before, that central banks are taking up a lot of volume and acquiring and storing gold. Other factors driving up production cost. It costs about $1,300 an ounce to produce gold, and that has been driven up higher. We had the Russian-Ukraine conflict, which drove up energy prices we've had. It also drove up the prices of explosives in the mining process. So I think there's going to be that continued trend that will carry it and sustain its value. In circulation, I believe there are about 250,000 tons of gold in circulation, which can be recycled, unlike silver, which is a corrosive metal. And there's about 50,000 unmined tons that is known of. And if the trend continues where that unmined 50,000 is brought out the ground, that can only mean one thing, that the price will hold itself and continue rising. So I remain very bullish of gold, But there are going to, as Peter highlighted, we're going to have, I think we're going to have a few years of political turbulence and the market is extremely long. And if we look about, everybody talks about liquidity providers, or who's your liquidity provider? And of course, there are big names of liquidity providers, but you know what? Everybody is a liquidity provider. If you're trading one lot or two lots, you are providing liquidity. So the dynamics of the whole industry have changed completely. And just going back a little bit there, I think most people are looking to take the value, to take the who don't want to take actual possession of the gold. If you just want to trade the price and just take the cash, either the profit or the loss,
And
hopefully the profit, then the CFD market is definitely what you should be looking at.
It's true about a lot of traders. That's the lesson, I think, of crypto as well. There were so many people trying to take custody of crypto and so many nightmare stories around keys being lost that once it was solved in terms of custody and security of funds with good brokers, that virtually everybody just moved into taking it synthetically and keep maintaining the upside. Diego, are there risks that you're watching? I mean, we saw gold really took off at the start of the Ukraine war. There may be a war in Taiwan in the future. There's instability in the Middle East. Is that the driver, or are things like deficits, which are becoming a bigger problem in the bond market, something that we should be watching? Are there any risks that you're watching around the world for this year?
Well, we have seen in history that gold thrives when there are big geopolitical conflicts or any situations that make the world not so stable. As well, we know that it's sometimes used as a safe haven, right? So I believe this plays a big part on it, but not only. We are seeing, as you have mentioned as well, that gold is also going to the crypto part of it. We have tokenized gold, and like Tether gold, for example, and it gives the world the opportunity to trade. It was so difficult to trade physically, and now it's being more accessible. So this also can make gold go to a level that we didn't see a high in gold. That's what I see on it.
I think it's quite fun with gold that gold is kind of in the middle because anything that happens has an impact on gold. So gold ends up being, it's a very central asset. I mean, we have this wonderful news now that we might have peace in Gaza, maybe. That would be wonderful. That's a big change, and that will have an impact on gold. We have, as you said, the Ukrainian situation. That has an effect. But there are things that are closer to us that can implode as well. I mean, the Horn of Hormuz, if you look at the amount of oil that goes around the Horn of Hormuz, if a couple of boats are sunk around the Horn of Hormuz, then the dollar price might go to 500, and that will have an effect on gold. If there are more problems in the Red Sea in terms of traffic going through the Red Sea, that might have a problem. So,
or the Panama Canal.
Oh, the Panama Canal, a great example. And so all of these things, and they're all connected to gold. As a gold trader, the fun thing about it, in my view, is that you have to keep your eyes open for everything, because everything has an impact on overall investor confidence, which then is connected to gold. It's great fun.
It's such a chameleon, gold. It has these different roles for different people and goes up for different reasons or down for different reasons. Is it really a more unstable world right now, though? It feels like every cycle we think things are different this time, but with hindsight, it looks like, well, actually it was relatively peaceful. You've been a trader for a long time, Richard. Is it a more dangerous time? And is the currency market, to tap into that, a bigger problem than ever with the US dollar, and I think a lack of confidence there internationally?
Totally. We live in very, very uncertain times, and sadly, it's quite worrying. And as you just stepped on there, Peter, let's hope there is some peace between the Israel-Gaza situation. That's an awful thing. I think you're going to have global uncertainty. I don't know if it's a demonstration of political weakness in many cases, that things can't be eliminated and stamped out straight away. The trend now politically is a little bit more centre-left, which would then perhaps not stage a more aggressive way of stamping things out quickly. Will newly elected President Trump, will he do anything about the Russian-Ukrainian situation? Well, hopefully he can. So yeah, I'm digressing a little bit, but I think globally we live in a very unstable political landscape. Gold will always benefit from this, but I am very conscious that there's a big correction going to happen in gold. I say big, maybe $200 or $300 on the downside at some stage, but the trend will remain firm and will go higher as Diego. I agree with Diego's levels.
We have an opportunity to take questions if anyone in the audience is interested in asking. You know, it's interesting. You know, you talk about the geopolitics and the change in the world. Is that we had this era of globalization. And if you look at trade flows, they're still very high. Global trade in 2024 was higher than ever. But there's this sense that even as soon as Monday, with global tariffs, that we may be moving into this more siloed world, whether it's BRICS outside of the US dollar. And there was just this assumption that you could hold US dollars and do anything almost anywhere with them. You know, is that really a driver for gold as that retrenches, whether it's starting in China or BRICS or the Middle East? Like you said, Turkey's accumulating a lot of gold as well. Is that a real driver, do you think, going forward?
Well, one of the things I think we've learned over the last couple of years is that whatever assumptions we make, forget them, because there's a high probability that something very, very different will happen. So we don't know. We might have beautiful peace and trade across the world over the next 10 years. We don't know, or not. We simply don't know.
Well,
so in terms of where the future goes, I really don't know. In terms of where crypto goes, I really don't know. We have this cheeky copy of the USDT. And it's quite cheeky. Just copy it. Just copy the whole currency. So, and now we have very crypto-friendly people coming into the American administration. Okay, are they going to make their own USD copy? I don't know. But there are many, many variables. It's going to be great fun. I'm really looking forward to the next couple of years. And being a gold trader in this is brilliant because it's going to be quite a ride.
I think a lot of people are looking for somewhere to hide out, and it fits into a lot of boxes. If you're looking for that kind of safety, you're looking to avoid the sanctions risk, geopolitical risk, trade risk, and something with a little bit of upside. It can tick every single box that you have, I think, and it's what makes it so interesting. If we look ahead, even to the longer term, I think we're all fairly bullish gold. Is there anything that any of you see that could really hurt the gold market? We have and even out of left field, like AI I think is going to change a lot of the economy, whether it will create a lot of wealth but redistribute a lot of wealth in a way that, I don't know, it will be unstable, but maybe not necessarily in a way that's good for gold.
Given that 90 to 95% of all gold trading is virtual, it's all about other people's expectations. So what do you expect others to think? It's classic trader territory. So if we all start expecting other people to trade down, then it will go down. And if we expect other people to trade up, it'll go up. So if everyone in this room thinks of a number between 0 and something else, then what's the number everyone's going to think about? I don't know. You have to second guess. Well, this is trader territory. This is all about expectations.
Let's also not forget the activity of fund management in gold. Now, many of us here will look at a chart and we'll see a resistance level and a support level. We may see that when gold peaks, that's actually a golden opportunity for funds and trend followers. That's their signal to buy even more. We just don't know. And then, of course, you have contrarian traders who will take the polar opposite. So somebody's going to benefit somewhere, and it's always difficult to know unless you know somebody in a fund who will furnish you with such information.
Some people will make money. Definitely.
Somebody always. But and you know what? Gold has had an incredible run in a U.S. dollar bull market. And I wanted to ask you, Richard, we've been in a dollar bull market for 3 years here now, and the dollar is record highs across the board. Of course, gold's priced in dollars. If you've invested in yen, for instance, in gold, you've done extremely well. But what can happen to gold when we eventually see some sort of peak and reversal in the dollar? Is that something that's in the horizon?
Anything's possible, isn't it? There used to be so many golden rules when economic releases were made. You knew, okay, that means interest rates are going up. Something would come out. The market was always very conscious of watching big figures like non-farm payroll. You knew immediately what the impact would be on the dollar. You knew immediately what the impact would be on any kind of commodity. The rules seem to be broken. There doesn't seem to be any logic whatsoever anymore, in my opinion.
Well, it was interesting just this week in the most recent non-farm payrolls. It was a very strong report, and gold actually it initially went down, then shot up.
Exactly.
Kind of opposite to what people are thinking. So it can be something that's very challenging to trade. A lot of markets are right now, but there is a little more of an opportunity for patience and bringing down the leverage, like you said.
Just my only advice would be through turmoil is have a discipline. If your intention is to remain long of gold, be sensible. It's very basic, but put a stop loss in place. Aim to make 3 times more than you intend to lose. It's an old rule of thumb. It's very basic, but never average a falling position. Just be very, very careful.
Well, thank you very much to my esteemed panelists. Thanks for joining us here today. Up next, we're going to have a panel about scams and avoiding them in about 10 minutes from now. So we'll have another panel on that. I think it's going to be a very interesting one. But please, a warm thank you to our panelists here to start the day. Thank you very much, guys.